guess Reggie ain't showing up today, huh?
No.
All right.
He missed a couple of meetings.
Oh. Hey, Al.
Hi.
Hey, lady, how you doing today?
She wanted to make sure she got a chance to speak up this time.
Oh, I heard you doing good with your portfolio. You're killing it with Disney, huh?
See,
I'm
getting
still
her
kicking
started.
myself over Disney, man. Still kicking myself.
Why? What happened?
No, I was telling Reed when it was low, I should have jumped in, and I waited too long. When it was down like the $85,
Oh yeah, got you. I remember.
I
Yep.
should have jumped. Now it's up to like what
120.
115, 117.
Yeah, 120. Yeah, that's the last. Yeah.
Kicking myself, man.
Hey, not too late.
Oh, no.
Cause they opened up July 11th, I think. So
I
once they
believe
start,
so.
yeah, July something. So it's not too late. I mean, you missed up on a couple of dollars, but hey, I think I only have one. I have like I think one share of Disney.
Yeah, Disney. It's funny because I think everyone was expecting it to go further down. That's that risk that you take, unfortunately.
Mm-hmm.
You exactly right. That's what I was thinking. I was like, oh, it's gonna keep going. But I'm saying I'm a novice, so I ain't know no better.
No, it stayed at 80 something for a while. 80, 85. I don't think it went below 80. It was like 83, 89.
Yeah, it touched it for a little bit, and then
Yeah.
of course went right back up. At, what's going on, man? I see you're on. Appreciate you joining.
Now that I've been talking to y'all insightful brothers, I know better.
Doing good, Rico.
Good. All right. Well, I got 5 minutes after, so I want to get started. One of the things that as we get more folks joining, I want to always reiterate back to everyone that, I love putting this together because I'm still learning myself. But, again, reminder, I'm not a financial advisor. I'm not a tax consultant. I'm not a stock analyst. So always make sure that you do your own research and, whenever trading, that you're always comfortable with your decision before investing, short-term or long-term. And one of the things as this group grows, even though I love putting this information together, meeting everyone, if you find today's session helpful, I set up a Cash App, no pressure, but I feel like that's also just an opportunity for me to get a little stock money on the side. Again, if you find these sessions helpful going forward. All right. So today's topic, I wanted to talk about emotional trading, because whether you're short term or long term, this is going to be one of those factors that, just looking at Disney as a perfect example, is one of those things that your emotions get caught up into making a decision. And whenever you decide or hesitate to pull on a trade, it's typically your emotions that's causing you to do that, right? And I'm guilty of it even now, because you're always questioning yourself, right? There's so much media outlet, there's so much chatter on chat rooms, and it always causes you to second guess yourself. So some of what I'm going to cover today, I know I've heard it many times before, but I felt that it was a good opportunity to repeat some of this information, especially for some of you that haven't experienced necessarily the emotional part, because I will tell you, going through it, it really comes down to your ability to control that on whether or not you get in at a good point and get out at a good point. So hoping to have some good dialogue about this one today, because I think it's relatable to all of us. So today's content, just to give credit, I got from this site called Market Insiders Club. This guy, Dave Gagne, he's a self-directed trader that started trading since 2002. Similar story to ourselves. He looked at an opportunity to generate additional income kind of started learning on his own. And so what I'm sharing with you today is part of his experience over the last 18 years in the business. So feel free to check out his site, Marketers Insiders Club. Um, so one of the things that he talked about is, traits of a successful trader. He broke it down to three categories: trader psychology, money management, and the system. So the trading psychology is the human mindset of how it functions in terms of identity, beliefs, and behaviors while actively trading. Um, the money management part is basically, he described it as a defensive concept. So making sure that you have a plan to retain as much of your capital or your money in order for you to continue to trade another day. So, example being, if your account is $1,000, have a plan that you're not using all of that $1,000 on just one trade every single time, to diversify it, so you're not losing your capital quickly, just because you have a belief that you're going to make a good trade. So being strategic about it, have a plan. And then the last one, which is a smaller percentage, is having the system. So this is inclusive of your own personal trading strategy, which I think I talked about last week. Was identifying your time frames of your research. So one of the things that I've shown a couple of times is, when I look at the history of a trade or of a company, I'll use 1 minute indicators, 5 minute indicators, 1 hour indicators. If it's a swing trade, I may look at multiple days. So your system is inclusive of those type of things. How many positions are you willing to take? Knowing what your support and resistance levels are, and then sticking to your entry and exit points. And so he listed system as a small portion of it, because if your psychology isn't straight or your money management isn't straight, your system basically gets thrown out the window, which makes sense, right? If you have a game plan going in, but then you get caught up in the emotions, all of a sudden you start adding to your positions, all of a sudden you start trying to average down, and then your trade goes out the window. So I think it makes sense, right? And the more you start getting into trading, I actually think the percentage should probably be higher for me personally, because I find myself questioning most of the times when I get into trades. So he defined the trading psychology a little bit further. I indicated, or I put on here this meme about, you can't handle the truth. The reason why is because he spoke a lot about how nobody can make you trade but yourself. So at the end of the day, even though there's a lot of resources out there, at the end of the day, you're the one that's responsible for getting in and getting out of the trade. So the failure or success is really up to you. Knowing when to quit and when to push. I think I've mentioned it a few times that if you are not trading on a day because maybe your funds are either on hold, or you're waiting for them to settle, or like in my case, if you've ran out of day trades for the week, that shouldn't mean that you stop paying attention to what's going on in the market. Personally, I try to mental trade when I'm not trading with my cash. And what the mental trade is basically looking at a company that I would buy for a day trade and writing down what my entry point and what my exit point is, just to make sure that what my strategy is still aligns with, getting in and getting out. And that's similar to paper trading, right? Um, Taking stop losses. I've seen a mixture of this. Want to get some of your thoughts about this, but Dave spoke about taking stop losses, of meaning that he believes that you should always actually set your stop losses in your broker tool, not just a mental stop loss, because the mental stop loss, as you know, if there's a mass sell-off, it could take a while for you to get in and actually sell your positions. But he was very specific about adhering to your stop loss strategy in order to save your capital. what are your thoughts? I mean, for those of you that's day trade or swing trade currently, do you guys set stop losses yourself, or do you just write it down, and if it drops to that point, then sell?
My portfolio is like long term, so it's an investment portfolio. But still, I'm like, if something happened, do I want to lose this funds? I'm like, so I haven't added a stop loss on any of my shares.
Long term?
However, long term, but I'm still
Okay.
considering it because the way this market is right now, it's like, should I have something there just in case, or
Right.
because I know it's long term, I'm not going to touch it for the next couple of years, just let it ride. But I still don't want to take that hit because I want to have some of my profit, if it really dips down, and then go back and purchase at a later time. So that's where
Yeah.
I'm at right now, especially when, there's talks about that the market might crash again. At least I can walk away with some profit and then,
Yeah.
come back in at a low amount.
Yeah. That's
So
true.
for me, like I got a couple of shares in Moderna, and that just went like way down this week. And I was, oh my God, I was having panic attacks and biting my nails and all that.
Yeah.
But it came back up a little bit. It was a little stressful. Well, only had a couple shares, but it was still stressful though.
Yeah. Well, that's a perfect example. I was telling Al that last week my dad, who's retired, um, was asking me about some of the pharmaceutical companies, because just like most people, he was looking at the opportunity to make a lot of money for the company who gets the vaccine first, right? And he called out Moderna, he called out Inovio, and another one, and he wanted to take out like 20 grand out of his 401k and divide it across three pharmaceutical companies, and two of those that he mentioned, I said, no way, please don't. I said, I'm telling you, Dad, do not do that. I said, there's too much volatility in that. And last week was a perfect example. Had he had bought in, let's just say $10,000 at Moderna at $85 when there was a lot more hype, he could have quickly lost 3 grand by the time it went down to $55. And that's just a perfect example of how, if you're not doing your due diligence, or if you're not following what the company is doing, or understanding that just a sheer uh, tweet or message about their progress could drop 15%, 20%, and then you don't know if it'll come back up, right? I mean, there's like 100 plus companies, I'm sure, that's trying to get the vaccine. You only hear about a few of them because of the media news. But what if, and here's always the what if one of those companies, the smaller companies, gets to a success level before? That means everyone that's currently in Moderna that wasn't in Moderna before could quickly sell off and jump off to another company. And then what do you think will happen to that price point for Moderna, right? It can continue to tumble. So, Al, to your point, I agree that if you're looking at long-term investing, it may not make sense to have a stop loss, but I also think it depends on what company that you're looking at, right? If you're looking at a Disney who has 100-year track record of continuous growth and being able to go through tough times, compared to a pharmaceutical company that, if you go pre-COVID, they were at $2 for the last 10 years, you know, you have to ask yourself, is it worth not putting a stop loss? And could this company go back to its original bench line? And are you willing to take that type of a drop? Right. And so, just something to think about. But, I think stop losses are important if your company that you're looking at doesn't have that track record of being able to come back to a baseline that you're comfortable with. Um, Hitting your targets, one of the things he talked about is just hitting your targets, is making sure that you're not getting out too quickly whenever you get in, making sure that you're sticking to what you set out to do with that trade. These last two I think are very important: controlling your greed, fear, and hope. I think we've all kind of felt this one, right? When you start to make money and it looks to go your way, you think about, can I get some more? The fear is, as soon as you get in, is it going to drop? And then the hope, which that one defines me a lot, is when something drops, and this goes kind of go back to stop losses, I hope that this comes back up, and you start coming up with rationale in your head of why you think it's going to come back up, and then it doesn't. And I've been stuck in the company Conduit now since February, after their Q4 earnings, with the hope that they were going to come back up, and because of a bad earnings. And unfortunately, they didn't come back up, because right after their Q4 earnings, COVID hit, and they haven't been the same since. So I'm still hanging on to them, because Conduit's been around for a long time. And for those of you that know that company, they outsource a lot of the call center work. And, as Al mentioned a couple of weeks ago, when it starts to get to the end of the year, seasonality, a lot of companies hire companies like Conduit for contracts for peak season. So I'm being a little bit hopeful. I've seen them increase a little bit, but lessons learned for me, I should have gotten out when it hit my threshold of a loss. And then the last one is just discipline. This is going to be one that this is going to be one that you have to continue to work at, right? Because as you learn and take your losses, you want to make sure that you continue to get better and analyze what you did wrong, so you don't repeat that same pattern. All right. So one of the things, another one of the items that he talked about is, are you one of the average traders? And he goes along and kind of calls out several things that if you just ask yourself and you agree with, then you're probably one of the average traders. And as he pointed out, there's nothing wrong with being an average trader, but it's just that you understand that, and that there's still opportunity for you to get better. So the first thing he says is that if you're one that doesn't have a trading plan, or you don't have a very specific goal of what you're trying to get out of each trade, then you're probably one of the average traders, because you don't have a plan. You're just getting in, and or you're following others, which makes sense. You have no money management rules. So, the definition that I was showing earlier, basically that if you have $1,000, every time you try to take a trade, you use up a lot of your capital, which is a big risk, especially if it doesn't go the way, right? So not having any management rules when you go into any trade, you categorize that as being part of an average trader. You're prone to emotional swings. I'm guilty of this one. When the price goes up, you get a little excited. When the price starts to go down, when the price goes down, it's like, oh my God, I need to get out, right? And even though you may have set a comfortable stop loss rate, as soon as you start to go down, you start panicking. And, again, that's part of being an average trader, but this is where the opportunity to get better at your emotions and sticking to your plan will start to eliminate you getting happy or feeling like it's the end of the world, which is crazy, right? Because you think of, if your price is going up, you should get excited, but it's get excited after you're done with your plan, right? Be happy that your trade executed like you wanted to, not while it's happening, because those emotions, is what he was saying, could cause you to get out early, because you might see it hit 2%, but maybe your initial plan was that you saw a 5% profit, but the moment that you see 2%, you cash out because you're excited, and then the moment you cash out, it continues to go up to your original target. So being prone to emotional swings, again, I'm guilty of that one. I'm continuing to try to work on this one myself, because I know it's, again, it's something that influences my trade. This one's funny. You're nervous most of the time when in a trade, right? Dolo, you were just speaking about that one, about how, when you just watch Moderna, when you're in it, even though it's one share or two shares, you start analyzing all the what ifs. Should I get out? Should I get in? Should I add more? If you're nervous, that means you probably had an opportunity to tweak your plan prior to getting into that trade. And so the only reason why you're nervous is probably because you didn't have an initial plan that you were following in the first place.
Stop talking about me, man. You know
I
me too
know.
well. Stop.
I know. Hey, I've said I'm guilty on all of these. Trust me. When I was putting these down, I should have just put, this is my thoughts. Because
It's all me too, man. Like a lot of times during the day, I gotta stop myself from watching CNBC while I'm at work, because I'll be like, yo, I'll be ignoring everything and just focusing on the screen. Like, what's going on? What's going on? I gotta stop that.
Yeah. It's kind of give and take with that too, because you know, a lot of information that's out there is good information to understand, because the thing that I always try to remind myself is that everybody else that's trading is paying attention to most of the same resources, right? And I think we talked about this in one of our previous sessions. The market moves because of people like us that are making the trade. And unfortunately, or fortunately, depending on how you look at it, majority of the people that are trading are the non-experienced traders. So that's why there's always the sway of market price, because of news and emotional reaction. Majority of the people that are not the technical traders that do this for every single day, you know, they're the ones that are causing the price to go up and down the moment news comes out. The smarter traders are the ones that are waiting for that reaction news, and they know when to get in and know when to get out before the news settles down and people realize what the heck just happened. Which kind of goes to this next one. You quickly give back to the market your gains. I know I've been guilty of this one. I'll make a trade and I made a profit, and the moment I get that profit, I try to get back into another trade, knowing that I didn't study and didn't prepare for that trade. But because I made $30 on the trade just now, I feel like I have to now take that $30 and just try to get back into it before the end of the day, to try to add more to my capital, because I felt like I made a good decision. And so his point on this one is, if you've executed on your plan, walk away, right? Step away from it. Most day traders that I've seen on listening to them speak, they will tell you after the first few hours of the market opening, they're done for the rest of the day, even though there's a lot of price fluctuation at the end of the day. But they know by the end of in the second half of the afternoon, most of that emotional trading is done. They take care of that emotional trading opportunities at the start of the day, and then they're done for the rest of the afternoon. I watch it the entire day, which is probably not the good thing to do, but I feel like I'm still learning. But again, it comes back down to your strategy. But always think about this one. Are you giving back your money that you just got, as opposed to recalculating and getting your thoughts for the next trade, maybe another day? Again, this one's a big one. You try to recoup your losses immediately. You know, you guys have heard this term, maybe you haven't, but the more you start paying attention to trading, you'll hear the term revenge trading. This goes, you know, again, going back to this concept of the psychology of it. The moment you get a big loss, you think that you got to get back in immediately to try to recoup some of those losses, because you took a bigger hit than you expected to get. And that revenge trading is purely off of emotion most of the time, without your strategy, because you're quickly trying to get back in. This could be, you know, one of the things that quickly drains your account. I've been guilty of it. I try to call myself out on it in my own notes on my trades when I feel like I do that, to make sure that I'm reminding myself that I need to, you know, continue to move away from revenge trading, and sometimes completely shut down my computer and not look at my account the rest of the day, because it's easy to get sucked back into it. And Al, I saw you smile. Did that sound familiar?
Yeah. I said
Yeah.
the one when you raise prices, prices goes down the sky and it's falling. And you're like,
Yeah.
I remember just Jeremy, just that
Throwing
gift
money.
that he always used, throwing the money out the window.
Yeah. And you just got to sit back and take it. You know, you just got to sit back and take it. And this next one I've spoken about before, and I actually am I feel like I'm personally doing a better job of it, even though the results don't look good. But if you're someone who never reviews your trade results to follow up on winners and losers, I think that's important. And you can definitely have your own strategy, and I've shared this with some of you before, that I created my own spreadsheet that tracks my my day trades and swing trades. Every time I get in, I indicate the date, the ticker symbol, my entry point, my number of shares, and if I had once I get out, I indicate what my percentage loss or gain was, and that's what I was tracking to capture my accuracy. The thing that I'm doing different now is I'm making comments next to each of my trades, whether it's a day trade or swing trade, and then I'm starting to make notes for myself. Why did I get in? So it'll be something as simple as, I saw this come up on a chat, or they have earnings coming up, or they had FDA approval. I'm trying to capture those notes for myself, because as I get more progress under my belt, I want to go back and look at my winners and be able to see what was consistent in all of my winners versus all of my losers. I will tell you, it's too much to try to memorize, especially if you start day trading or swing trading, because you're going to get so much volume that over the course of 2 months, you're not going to remember what you did, what your thought process was in March when you took that swing trade. So figure out your own strategy. But one of the things I would recommend is follow up on when you win and when you lose. So see if you can readjust going forward what your strategy is. Is anyone doing that today? Any of you guys doing that today by chance? Making notes of no? Yeah. Even if you try it out for a week, give it a try and see if you reflect on your trading any differently. Again, just speaking from my own experience, since I've been doing it for the last couple of months, again, what only thing I was doing was tracking actually my trades. But I felt that even though I can look at my results in Robinhood or E-Trade, the act of actually writing it down kind of forced me to remember that trade. But what I wasn't doing before is making notes while I was getting in that trade and while I got out, of what my thought process was. I think that's going to be the key on finding what your strategy is. Once you have enough trades under your belt, you can look back at history, just like with most things, and say, what was the contributing factor to all of my successes versus my losses, and can I continue to hone in on what my strategy was for those winners, right? And if anyone's interested, I can send you my my spreadsheet afterwards. But very simple, but it has the formulas built in. But I'd be more than happy to send it to you if you send me your email afterwards, and then you can just start tracking it on your own. I actually even have it on my phone. So whenever I make a trade, if I'm not in front of my computer, I don't wait until the end of the day. I'll go on my phone, pull up Excel, and then I'll plug it in, and I'll just keep moving. Then the last one, which is pretty obvious, if you're an average trader, is that you're losing money, right? And he kind of chuckled this one, but it is obvious. If you're losing money, you're an average trader, because most average traders lose money. The difference that he called out with a successful trader is that most successful traders, it's not that they don't lose money, they control how much they lose. And so by controlling your losses, the thought is that the strategy, I should say, is that your wins will make up more than what your strategic losses are. Right. And so I think that was big for him to emphasize, is that he was saying for himself, he considers himself a successful day trader, but he is still only accurate about 50 to 60% of the time on average, which you think is like, man, that's not a lot. But if the time that you lose, you're only, risking 1 to 2%, but when you win big, you're winning, 5+%. That's what he's saying, is it's not about not losing money. It's about reducing how much money you're losing so you can continue to stay in the game. All right. I thought this was funny. He calls it the idiot, is the idiot making decisions. And when he refers to the idiot, it's more of, again, going back to the psychology, it's that inner voice in your head that keeps you going in or staying out of a trade. Um, so when you're entering a trade, does the idiot would come up with all kinds of reasons why the trade wouldn't work, right? And so perfect example for myself is I'll get into a trade, I think it's the right thing, but then I'll look at the previous day and I'll question myself, oh, this isn't going to go up because yesterday it didn't go up. So even though I should be paying attention to today's technicals, I'm questioning myself the moment that I get into a trade, and why it's probably not going to work out. So again, I'm going back to the psychology. And when you do enter a trade, you're constantly talking in your head, with every possible decision you have to make. So, when you get in, if you're constantly thinking about, do I need to add more to my portfolio? Do I not? To my positions? Do I set a stop loss? Do I have to change my stop loss? If you're making all those decisions after you've gotten in, again, it goes back to you're not sticking to your original plan. And so now you have to figure out what was it about your original plan that caused you to have to now question it once you got into the trade. This one I'm guilty of. When the price goes up a little bit, the idiot in me wants to sell immediately, right? Even if the price goes up a lot, the idiot, and then on the opposite side, if the price goes up a lot, you tend to want to hold because you think you're going to get more, right? So again, perfect example. If your strategy is to get out at 3%, the moment it hits 3%, you say, oh, it might go up to 4%. Or it might go to 5%, instead of sticking to your plan that you originally came up with and being able to walk away. I will tell you, when a plan or when a trade goes successful to what I wanted to get out of the trade, I always have those moments that it ends up going higher, but then it only ends up going higher for a shorter period and then it drops. And then I say, man, I'm glad I got out. Yes, I could have probably hung around for a little bit more, but the point of this one is if you got what you wanted out of the trade, get out and don't talk yourself out to trying to hang on to a little bit more. Jeremy, does that sound familiar?
Sure does.
The same one, when the price goes down, the idiot tells you to hold on because the price will come back eventually. That was funny. I still have the hopes and dreams on that one. And then his last point was that, look, you can't eliminate the idiot or the thought in your head completely, but he described it as, but you can learn to deal with it with a boss-employee relationship, which is interesting. And what he means by dealing with your inner thoughts with the boss-employee relationship is this: if in a boss-employee relationship, if an employee isn't doing what the employee is supposed to be doing, then you fire the employee, right? So no different than when you take a trade with a company. If it's not doing what you wanted it to do, fire the trade, or get out of that trade. Don't feel like you have to have an emotional attachment to that trade, because there will be other opportunities right after that one that you'll have more of your capital to get into. So if you start treating your inner thoughts as a boss-employee relationship, if it's not doing what it's supposed to do, then you fire it and you move on to the next one. If you still find yourself trying to rationalize it, then again, going back to being an average trader, your emotions are still tied to your trade.
I like that point. And
Yeah.
I think that's when I first purchased, when I first got into this, a couple of months back, I had some companies I purchased some shares on, and for 60 days, it was like it moved 1 cent. Like it wasn't even moving at all. And I just was like, you know what, forget it. I'd rather just take my money elsewhere. And I mean, like you said, I fired them and we purchased into Coca-Cola, but I just gave up on them.
Yeah. It's tough, man. It's tough. I think after reading up on and listening to a lot of traders who have been in the game for 10 plus years, they still talk about the psychology of trading. I was telling Jeremy that I was on Friday. I sent out a message about watching that young trader Ricky Gutierrez live trade for an hour at the start of the bell. And one of the things that jumped out at me watching him trade is not only was he trading for his own personal account, but while he was trading, he had a live stream going on with, at least 5,000 of his subscribers that were asking him questions. But watching him take a position in a trade while still answering questions, to me, I just felt like he was in a much different space than I was, right? Being able to talk to people, answer their questions, and just nonchalantly just saying, I'm going to go ahead and take a position here. I'm going to take my stop loss here. And even when he hit a stop loss, he just moved on from it. He didn't react. He didn't show any emotion. He just said, yep, it hit my stop loss. But he stuck to his plan. And within that hour, he didn't come back in because he took a loss. He felt that it was climbing up and he saw potential. So he started off with 100 shares. Then he saw it creep up a little bit more. He added more to his position. But the moment he did that, he adjusted his stop loss. While he was doing that, he was still talking to his live audience, asking questions. So to me, I would have been all nervous. I would have been like, I can't talk right now. I got to watch this minute by minute. But it just goes to show that once you can control your emotion and your plan is your plan, you could focus on other things because your emotion isn't riding your decision, right? But if you get an opportunity to look at some of the live traders that have their trading recorded on YouTube, take a look and learn from that. See if there's anything you can pick up. But I definitely agree that if your strategy is then you stick to it, hopefully that will help with taking more of the emotions out of it.
Did he share the companies that he was investing in real time and everything? He gave the company names out.
Yeah, he calls the company names out. As a matter of fact,
Oh, okay.
If you watch him, he only primarily trades in ETFs, so natural gas and oil. So
Okay.
his specialty, he'll tell you, his specialty is trading UGAS and DGAS because they are opposites of each other. So when one goes down, the other naturally goes up, right? So they're reverse ETF portfolio, and there's a lot of them out there that are kind of reverses of each other. But he follows those two, and he's comfortable with his strategy, and he makes a lot of money off just those two. It doesn't mean that he doesn't get it, and he'll tell you he doesn't. It's not that he won't get into other companies, but his bread and butter is he sticks to those two ETFs because he feels like he knows their patterns so well that a majority of the time he makes money off of it. And that goes back to what I think I was sharing with you guys before is I know I haven't found my strategy. I'm kind of all over the place. I'm bouncing around from swing trading to day trading to looking at FDA approvals to looking at earnings. That's why I think it's important to track your winners and see if you can start finding a something that's consistent factor in your winners, and maybe that could be the thing that you start to hone in a little bit more and get better at. So this next slide, the best way to get control of your emotions, some of the things he called out, some of this we've already kind of talked about, but having a detailed trading plan, what is your entry point? What is your exit point rules? How much of your overall portfolio should you spend per trade? For me, I know I haven't gotten to that point yet. If I have X amount of buying power, I normally probably use 90% of it on one trade, and I need to get better at that. because my thought process is if it goes well and I use majority of my capital, then I should have a bigger payout. But that's a clear example of me being an average trader. Is I shouldn't be looking at it that way. I need to diversify my portfolio so I can retain most of my capital in the event that I don't have successful trades, and I can move on to another day, right? Having a detailed set of management rules within a trading plan. Write down the things that can help create repetition, reflect on past trades and learn from them, and then mentally trade even when you're not using real money to validate your strategy. I know I don't do enough of that, but I try to incorporate that in my week, especially if I don't have any trades for the day or for the week. I still try to pay attention to, some of the call outs of what you guys call out. I pay attention to some of the chat in, some of the trading chat pages, so I can, understand my rationale. If I would have gotten in, why am I getting in, right? So, some things to get better at, again, is creating your plan, seeing what helps, get your winners, and then try to recreate those things. These were just some, but so for those of you that have been trading for a little bit, anything else that you would add to this as far as things that you do to help control your emotions when trading?
I have a quick question.
Yeah.
All right, so who's the he you're referring to? Because I got in kind of late.
Oh, sorry. At the start of this, I was sharing and gave the source to Dave Gagne, who's been a trader for about 18 years. He has a company called Market. I have to go back to it at the start of the slide, but I came across one of his YouTube channels where he was coming up with, from his experience, these are some of the things to get better control of your psychology when trading, specifically day trading and swing trading.
Mm-hmm.
But his name is Dave Gagne, Gagne.
All right, got that.
Yeah.
And Dave, you said YouTube, right?
Yeah.
Excuse me. All right, thanks.
Mm-hmm.
Okay.
Yep. And any other thoughts on controlling emotions?
So for me, what I do is I'm pretty good with the emotional part of the selling of something. Like I'll take my profit and run and don't look back for the most part. I'll struggle with it from time to time if I see something spiking quickly. And the way that I do that is when I buy something, I've already pretty much decided where my exit point is and when I'm selling and how much profit I want to make. And I go ahead and set that sale price right then. So then I just let it ride. So when it sells, it sells. And then if it goes up another 20% after I sell, I don't really look back and question it. Now I might buy back in if I see that it's still going up. But the buying part is the emotional piece for me that I'm trying to work on and get better at, because I have a tendency to buy and then it drops afterwards.
Yeah.
So that's my struggle. Working on that now. But yeah, I definitely agree with set your exit strategy up in advance and then just let it happen, whatever that may be.
Yeah. And then just being able to walk away with it. And, I think, Jeremy, you and I were talking about this, the risk or not the risk, but the harder part with the day trading and swing trading, day trading in particular, is that when you take a chance on a trade and you hit a stop loss, even though your stop loss may be exactly what you wanted to stop out at, it unfortunately ends up using one of your day trades for the 5-day period. And that's the part that can get frustrating, because if you use 3 of your trades on a Monday, then that means for the rest of the week, you can't trade anymore. And then that's where the emotions and, the revenge trading part starts to come in, is because now you have to just kind of sit and watch for another 5 days until you get your trades back. If you're long term, and that's not as much of a thing that you have to deal with, but the day trading part of it is, if your stop loss hits and you use up one of your trades and you took even a dollar loss, now you can't trade for another few days. That part sucks. All right. So we still have a few minutes. one of the things I like to do also is if, that now that we've gone over the topic, is there any companies anyone wants me to pull up and kind of talk through either anything that you've seen last week and that we can kind of analyze together? No interest on anyone looking at anything? Oh, Jeremy, you put
Well, I'd like to see your thoughts on Norwegian.
your money maker, huh?
Yeah.
Let me see.
Hey, Rich.
Yeah.
Any good like penny stocks you've been watching? I've been looking at one I started recently looking at is like Party City, but any good like penny stocks or cheap stocks you've been looking at or watching?
No, I can't say I've been watching anything that I've been, hoping to get into. I've heard of Party City come up just because, they took a pretty big hit. I'm just not sure with like Party City specifically, with all the restrictions and social distancing part. I don't know how much of a rebound they're going to have anytime soon, and or potential of bankruptcy, because I've kind of heard some of that rumor mill as well of closing down stores. The longer that continues, it's probably going to make it worse before it gets better.
Gotcha. Okay.
So Jeremy, Norwegian, I know you took a couple of positions, you said last week. Where was your entry point?
So I'd have to pull up the app to see where it was. But what length of time is this? I'm having a hard time seeing it on my phone. 1 week, week and a half?
No, this one is 20 days. I can do 10
20
days.
days. Okay.
Yeah, this is 10 day, 5 minutes.
Yeah. So I'd have to pull up the app to see when I bought in and when I sold, but it was basically three different times. So I had purchased and sold same day. One of the days I purchased end of day, and then it ended up selling the next day. So this was one of the first times I'd actually used two of my day trades within the 5 day period. But each of those 3 times I got 10%. So, and I've recently bought back in, so I'm looking for another 10. But I'm just curious your thoughts, because if you were to look at this, would you invest? And if the answer is no, then that just goes back to that whole idea of getting in at the right time. So even if a company doesn't look that great right now to one person, if you do figure out when to get in and when to get out, there's still money to be made in those intermittent ups and downs. And we've kind of mentioned that before.
Right. So coming off, I think last Monday, they had a high pre-market. They jumped up to $18.11 compared to that Friday where they were around $16. So there was definitely a lot of price action going on in the morning. But from when the moment that it opened, it actually dropped down, right? Because there was a lot of hype, and I think a lot of people sold off. If you're looking at it from a swing trading or day trading, there is definitely pockets of potential on some of these days. So this was the 27th. If you would have bought in at the low right after opening bell, you could have gotten in at 15.88, and then you could have sold out at roughly $17, and then it consolidated for most of the afternoon, and then it eventually closed around 17.50. So you could have definitely made money there. On the 28th, it basically had a downward trend for the remainder of the week. So it went from as high as 18.55, and then it ended the week at around 15.66. So it actually hit its earlier in the week low. So last time I shared kind of looking at a trend line, right? So if I look from the start of the week where it dropped to around 15.77, and I draw the line of where it ended out, you can see that was a pretty comfortable support line for most of the week. It didn't drop below that until the end of the week. Now, if you're looking at this from a long term, what I would do is I would pull up, 30 days at a minimum and see what kind of trend did it have. All right. And so 30 days, it looks like an upward trend, and then it's starting to go back down. So now what you have to ask yourself is, where it ended up on Friday, is it going to go back up? Is it, or does it have the potential of going back down? Now, long-term investment, then I would say let's look at it a little bit further. So if I looked at the timestamp for pre-COVID, just to get an idea, let's pull up 180 days. So in February, they were around $55, right? So $55, that's a nice rebound. Now you have to ask yourself, okay, whether you buy it now at 15 or 18, the potential of getting back is great, but are you comfortable with the long term of getting in now and waiting potentially a couple of years? Right. So here's where it dropped. So it went from, high of almost $60. In March, it dropped down to $7.03. Now it's had a nice little bit of a trend up. So could you get in? Has the worst happened? Possibly. But that's the part that you have to be comfortable with your time frame. But it's hit, 17, $18 a few times since the significant drop. It hit it here in March 26th. It tapped out here again on April 30th. And then now at the end of the month, it spiked back up. So actually, that's pretty interesting now that I look at this. So the end of March, the end of April, and the end of May, it got back to 18, right? So if this pattern happens again, that means the first few weeks of June, it could potentially follow that same pattern and hit down to around 16 before coming right back up. One of the things that Ricky Gutierrez says is that pattern tend to repeat themselves, but they don't have to. This is a perfect example. If you look at the last week or the last few days of each of the last 3 months, it actually hit its high for the month, and then it dropped down for the first few weeks of the next month. So I would watch this one, Jeremy, because if it follows that same pattern, you getting in at $17, you might be chasing it down to 16 again before it comes back up.
Yeah, I'm in.
Yeah.
I'm already in.
Oh. Well,
but it's one of those. So my strategy lately has been, I'm looking for companies with a huge gap between where they are now and where they were pre-COVID. So I'm trying to get quick money out of them. However, there's so much gap between the two time periods that I'm comfortable, even if I don't get that quick money out of them, I'm going to get my money back. So then I just, stick with them.
That's good.
But that's
Yeah.
interesting. I hadn't even caught on to that whole beginning of the month. So there's a good chance that, but then, on the flip side of that, they may break that. And then if they do, who knows what'll happen.
Right. So the breaking of this, again, if you want to draw the trend line out from each of these three tops, right? So now that it's hit a resistance level 3 times in the last 3 months, you could say around $18, low to mid $18 is a good resistance point. So what I would watch for is if it breaks that, to your point, Jeremy, it could have the potential to keep running, right? Because now once it's broken that pattern, these now somewhat become irrelevant. But then you have to find out when is the new resistance level, right? Because now you don't have anything else to compare it to other than its previous highs. but knowing that nothing has really changed in the cruise line industry, you have to ask yourself, why would it get up to $60 in these next 30 to 60 days if there's still the COVID concern, right? So it could get to 19, and maybe 19 or $20 is the new high, because things start to gradually go back, but it may not, get back to that 60 for a while.
Yeah, I'm just looking for 10%. So if I bought in at $17, when it hits $18.70, I'm out.
Yeah.
Now, another thing too, though, is you could put the same line on the bottom of those points, and that tells you that would be a good possible trade coming up. When you see it hit that bottom again, it's got a pattern of going back up.
Yeah.
And I
right.
think that's what happened to me the last week. I'll have to, when we get off this call, I'll look up when I bought and sold. But I think that's what happened to me last week was I caught it on the bottom of that and was coming up with it.
Yeah, that's a good
Now
point. I mean, it definitely has a nice support level, right? If I draw this all the way across here, the lowest point here was 859. That was back in early April, and then in May the lowest was around low $9. So you could say, look, if it breaks below $10, again, no different than running up, it could run down below, because it's already shown the ability to go down to $7, even though that was in March. But if it breaks this top line, it could definitely continue to run up until it finds its next resistance level.
Hey, Richard, when you get a chance next, are you able to look at JetBlue? I just want to see their trend. I know last weekend you had mentioned that $10 was their new resistance level?
Yeah, they actually had a little bit of a break. So let's see. So right now, looks like they ended up hitting the resistance here of where they were at after their sharp increase back from late March. So that was around, $10, $11. It actually touched 1160. Yeah, so they do have a little bit of a trend up here. So let me see.
Because I know you called it. You was like, if they hit 10 for start to jump in, and they touched 10 and it stayed at 10. So I'm thinking 10 is their new.
So, I'm winning.
He said winning. This one caught the same spike on coming off Memorial Day, right? It started off pre-market, it got a lot of attention, but it followed kind of the same plan as everybody else. It dropped right after market open, and you could have caught this bounce back up, but it stayed roughly within that same area. But if you were day trading, you could have caught a couple of swings, but mostly it trended downwards. If I go back to that previous Friday where the low was $9, if I draw that line up here, it looks like the support level is around 10, right? So going into this week, if it drops below 10, then just know that it could continue to drop and touch that previous low of
$9 again.
Right.
Okay, gotcha.
But right now, there's not really an upwards trend unless I look at Friday specifically. So if I look at Friday specifically, you have a couple of tops here, 1, 2, 3. So if I draw this all the way out, you have a top around 1022, 1028, 1028 again. So now going into this week, if it breaks that 1028 mark, it could have the potential to go back up.
Keep going back up.
Yeah.
Okay.
With looking at the bottom or the stop loss at around $10, if it goes below that, then it could continue to drop. But again, the thing that I found with these airlines and the cruise is that the trend only helps to a certain degree, but the moment that there's an article that says, in this case, JetBlue is going to, let's just say, suspend travel another 30 days, that reaction off of that could cause it to just mess up its normal trend. So that's why I think it's important to look at what news is being shared come Monday morning. But assuming nothing changes, it could ride up. Most
I
of the news.
also
Yeah, go ahead.
go ahead, Rich. Sorry.
No, go ahead. Go ahead.
I also worry about companies in the airline and cruise industries that are going to have, articles come out at any given time now. Hey, surprise, JetBlue, we're filing for bankruptcy. So I'm a little like with the cruise industry, and same thing with airlines. I'm a little hesitant on certain companies, not sure if they have enough capital to survive this. So like, I don't want to, so for airlines, Boeing is a little too expensive for me. And I'm trying to figure out, for me anyways, where that middle ground is, like who can survive this, but who isn't ridiculously expensive too.
Yeah.
And I wonder that with cruise lines. So I don't know. It's just something to keep in mind also with somebody like JetBlue.
Yeah. Well, and the good thing is a lot of this information people have done the research on already, right? So if you're questioning, I mean, not only can you look at the company's performance and see how much debt they have, if you really wanted to get that technical, but right now, a lot of what we're playing as far as day trading and swing trading isn't so much the long term yet, because we think that there's going to be hope that most of these will go around. But the reality is the airlines are burning, billions of dollars a month right now until they can get back to normal. And even their normal, as flight restrictions go back up, they're going to have some requirements about capacity. And that capacity, unfortunately, is still going to be burning up money. But last week was a perfect example where the news, not sure if you guys can see it, but airlines stocks soar on signs of resuming travel and then recovery hopes. That's the scary part, is when a lot of the pump is because of things like hopes, is that another article on another day could cause people to sell off. If you hear recovery hopes or fears, that can cause it to drop just that quick. So it's important to pay attention with that, especially before you get into a trade. But the opposite, right? When you hear fears and then the price drops, once that fear goes away, if you would have got in at a good point with that fear, you could have probably rode that up a little bit, if you caught it at the right time.
And then that comes back to your strategy too. So if you're looking for short-term day or swing trades, you're not as concerned about their long-term health. You're just looking for a spot to get in, make your money, and get out.
Yeah.
So it really depends on what you're looking for. I mean.
Yeah. I mean, I'll tell you, in my long-term portfolio, I'm guilty of, I bought in some of those airlines and cruise in March when they really hadn't hit their bottom. Even though their price pre-COVID was pretty good, I feel like the makeup for that is still, I still have a big profit opportunity, but I bought in when they still hadn't hit their bottom. So my overall account, even though it's long-term, most of my cruise and airlines is still somewhat in the negative. And so I'm not, right now, I'm not adding a lot more to those positions because I really want to see what summer does. And yes, I could probably miss out on it. Let's just say it starts to take off. I could probably miss out between now and when it takes off a little bit more, but because there's still so much room of getting back to their pre-COVID highs, I may just catch it as it starts showing a better confirmation of a trend upwards. But right now, I'm not adding any more to my long-term for airlines or cruise until I see more of a confirmation that things have changed, that have created more of a safety improvement for consumers, or else it's just going to be too volatile for me. And any other companies anyone wanted to look at? I know we're over a few minutes, but still have some time if you guys want to look at anything else. Don't say MFA, Al, because I'm kind of upset with that one.
Actually went up this week.
Yeah, it went back down though. You see that? It ended back at 169.
Yeah, 169.
Yeah, and it got up to 190, but which I'm glad I sold some of them, but it dropped back down. So, this one's long term for me, so I may add more to it. But all right.
All right, quick question.
Yeah.
What's a good book to start? Because I'm trying to follow Al and I'm not really learning too much. So I want to learn. Where should I begin?
There is I don't remember which book I was reading. There's I would say anything that Warren Buffett recommends are probably long-term books that have a lot of history. I can't remember. There's one about investments. Give me one second. I think I have it written down here in one of my notes. I will tell you that the books for me have been a little bit harder to follow. So I'm not. It's not that I'm a fan, but I do better with audio myself. But there are a couple of long-term books out here.
Okay, so I'll go audio. What do you recommend? Or
so if you're looking at getting the knowledge of kind of long-term investing, I would Google or YouTube anything about Warren Buffett strategies, and then from that you will see kind of not knockoffs, but directions to other books that he recommends. But Warren Buffett is definitely a long-term strategy investor. Of course he's not a day trader, but I would start with Warren Buffett YouTube clips and see some of his interviews, and then through that you should see some of the books that he recommends that have been around for 20 plus years, that still goes back to just basic strategy of day trading or long-term investment trading.
Okay, thanks.
All right. Guys, I appreciate everyone joining today. As always, if there's a specific topic that you want to focus on next Sunday, shoot me a note and I'll put something together from some various resources. And then, of course, if there's any specific companies you want to take a look at, try to make sure we get some time where we can just pull some up and continue to learn together. But I appreciate everyone joining on this Sunday and hope everyone has a great day.
Thank you.
Thank you.
Thank
Appreciate
you all.
y'all doing.
Appreciate you.
Russ, I was asking you when you're done.
Thank you.
See ya.
Good night. Good day.